Discovering growth stocks that also pay dividends can be challenging, especially with the bust in banking and the real bad real fast in real estate that we had in 2022 with interest rates. This is primarily because companies with expansion plans or new product lines typically prioritize reinvestment over shareholder payout, otherwise known as dividends. Despite this, Wall Street still hosts a selection of growth dividend stocks. One category includes established companies that can afford dividends while remaining competitive and innovative. Another category involves strategic plays based on short-term trends uniquely benefiting their businesses. Finally, there are traditional dividend payers on the cusp of a growth-driven rebound. These 9 stocks presented in the following list cater to these themes. Each company is generally projected to achieve a 10% revenue growth and offer a minimum of a 2% dividend yield. Today's list includes a wide array of names from marine suppliers to cybersecurity. Be sure to stay to the end so you don't miss on any investment inspiration. First on our list, we have Abbvie. Abbvie Inc., ticker symbol ABBV, is a prominent big pharma company and might not be your typical growth stock. But given its current market cap of over $280 billion and a 5-year history of a more than 15% annual growth, nonetheless, the company continues to experience moderate expansion. Management forecasted that new branded treatments such as Skyrizi for psoriasis and Rinvoq for arthritis will contribute to annual sales growth between 7 and 9% through the end of the decade. With its existing substantial dividend and the possibility of increased income driven by this sales growth, Abbvie is an investment worth considering. Currently, Abbvie pays a 3.7% dividend yield. Next on our list, we have Cedar Fair, ticker symbol FUN. Cedar Fair LP is a leading amusement park operator and manages multiple entertainment destinations throughout the United States and Canada, including its well-known Cedar Point Park in Ohio, famous for its record-breaking roller coasters. The pandemic had a significant impact on Cedar Fair, but the company's stock and its dividend, which was reinstated at 30 cents per quarter last year, have recovered strongly, anticipating over a 35% revenue growth as the company regains momentum. Investors could potentially experience a significant short-term growth trend with Cedar Fair. Currently, Cedar Fair has a dividend yield of 2.7%. Next on our list, we have Darden Restaurants, ticker symbol DRI. Darden Restaurants is a major restaurant conglomerate in the United States. They operate well-known brands such as Olive Garden, Longhorn Steakhouse, Yard House, and Capitol Grill. Darden successfully navigated the pandemic by incorporating online ordering and carryout across its franchises. And this business model continues to thrive alongside the return of in-person dining. As a result, shares are trading at near all-time highs despite consumer spending concerns in 2023. Oh, and there are expectations for nearly a 10% sales growth if the year progresses favorably. I must say, I do enjoy Olive Garden's soup whenever I go there. And yes, whenever I go there, they're always busy. Currently, DRI, Darden Restaurants, has a dividend yield of 3.2%. Next on our list, we have East Group Properties, ticker symbol EGP. Now, East Group Properties is a real estate firm, and they're a large real estate firm valued at approximately $7 billion, specializing in the ownership and management of around 46 million square feet of industrial property across major Sun Belt markets of the United States. The company primarily focuses on states such as Florida, Texas, Arizona, California, and North Carolina. Unlike residential operators concerned with consumer rent trends or mortgage rates, EGP caters to industrial clients requiring loading docks and warehouse space. The company's cash flow supports a reliable dividend while also benefiting from a growth-oriented strategy. EGP anticipates a 12% sales growth in the current fiscal year and a nearly 10% growth in fiscal year 2024. Currently, EGP has a dividend yield of 3%. Next on our list, we have Gen Digital, ticker symbol GEN. Gen Digital is a provider of cybersecurity solutions, particularly suited for the current climate. As cyber risks have been a pressing concern for numerous corporations and institutions, the conflict in Ukraine has further highlighted Russia's hacking and malware capabilities. Although Gen Digital shares have experienced some volatility recently, the company's fundamentals are solid. With an expected 19% revenue growth for this fiscal year and a forecasted 16% growth for fiscal year 2024, GEN exemplifies a strong blend of growth potential and dividend yield. Currently, Gen Digital pays a dividend yield of 2.8%. Next on our list, we have Infosys, ticker symbol INFY. Infosys is based in India. They are a global frontrunner in consulting, outsourcing, and technology services, and they specialize in digital transformation of businesses across diverse sectors such as aerospace, agriculture, and financial services. Despite the current challenging macroeconomic landscape, Infosys demonstrates impressive growth potential with double-digit revenue growth anticipated for both this year and the next. Although dividends are disbursed only twice per year, the yield remains significantly higher than the S&P stock at the present date. Currently, Infosys has a dividend yield of 2.3%. Next on our list, we have La-Z-Boy Inc., ticker symbol LZB. Now, La-Z-Boy may seem like a traditional brand, but with a revitalized product line, the company is experiencing considerable growth as it regains market share in the home furnishings sector. In fact, the stock witnessed a surge of over 10% within a single week at the end of February, fueled by optimism surrounding its prospects. Projections include more than a 20% revenue growth for this year and a 30% growth for the next. On the income front, the situation appears favorable as well. La-Z-Boy raised its dividend to 18.2 cents per quarter at the end of last year, resulting in a yield that surpassed the average S&P 500 company by a full percentage point. I'm sure you're thinking what I'm thinking. Yeah, it's time for a new lounge share. Currently, La-Z-Boy has a 2.6% dividend yield. Next on our list, we have Marine Products, ticker symbol MPX. This is probably the most interesting name on our list today. Marine Products Corp. As the name suggests, they specialize in sports boats, fishing boats, and associated parts for markets across the globe. The pandemic spurred sales as people turned to water sports and outdoor activities to pass the time. Although shares have retreated from their all-time highs immediately post-COVID, marine products maintained solid fundamentals that warrant attention. MPX also recently raised their dividend from 12 to 14 cents, fueled by increased profitability, and anticipates a significant 24% surge in sales for its latest fiscal year. Currently, Marine Products Corp has a dividend yield of 4.2%. Last on our list, ending with a fan favorite, although I much rather like Black Rifle Coffee Company's Nitro Cold Brew better, we have Starbucks Corp, ticker symbol SBUX. The company that sparked the specialty beverage revolution over the past 2 decades offers much more than just coffee. Owing to its assertive global expansion and menu management, Starbucks has grown into a $120 billion corporation, forecasting double-digit revenue growth for both this year and the next. While its dividend is admittedly the lowest on this list, Starbucks' multi-year success makes it a growth stock with longevity worth considering. Currently, Starbucks has a dividend yield of 2%. Well, I hope you enjoyed this list today. For more dividend-paying stocks, be sure to check our dividend playlist for more investment inspiration.